The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, let's get to the important things first, folks. That was one heck of a baseball game. I don't know if you folks like baseball or not, but it doesn't get much better than that. 13-12, a real pitcher's duel. I wanted to share something with you from Robert Prechter about his social economic work that he does about baseball in just a moment. But first, we'll take a look at the German DAX. I posted the weekly chart up to that level. You see, we made a 1.27 expansion, and then when we look at the smaller time frame, which of course is the 60-minute, you'll notice that we've been in this really tight trading range here for quite some time, which is not too unusual given the fact that everything goes up, much like it did in 2000, but we'll see what's going on here. This is the chart that I wanted to bring to your attention. This is basically a chart from the Prechter's work that he does, which he does a lot of great research. He's a really smart dude. But I wanted to show you, because what he's doing is he's rating historical patterns in home runs to the stock market. It's really an amazing correlation. As you can see here, the average home runs, which is in the red, the lower one is at an all-time high, and they broke an all-time record. And with at least 1 or 2 games to go, they've already hit 22 home runs in this series, and that's one more than the biggest ever, and we still have 1 or possibly 2 games to go. As I mentioned before, both of my daughters have been Dodger fans ever since the 70s when our friend Tommy John played for them, and of course they went to school with a lot of the Dodgers from the late 70s and 80s. And so they really became really close to the Dodger family at that time. We used to go to the clubhouse and stuff and see Tommy Lasorda, and it was just really great. However, they told me yesterday as we were watching the game, every inning they would call, and one would call from Denver, the other would call from California and talk about the games. And they'd always remember the things that we did as a family with baseball, and that really made me feel good. But the main thing was towards the 9th inning, my one daughter called and said, "Dad, I want to go to the 6th game." And I said, okay. And my other daughter called because they were chatting together on Skype. So both of my daughters are going to the 6th game of the World Series on Tuesday in Los Angeles. And that means I'll be working here for another 17 years to pay for those tickets. Anyway, it's going to be interesting. I'll see how I get the tickets, but I'll have to start working on it this morning. But anyway, it was really an exciting game, and I really enjoyed it very much. Now, I want to share something with you, a couple things I want to share with you, of course, but one thing I wanted to share with you is something about the opening price. I wrote a book about this. I worked with this with John Hill way back in 1980. I would go out to visit John out in Hendersonville, North Carolina, and spend 4 or 5 days with him, and he would come to California and spend time with me. But anyway, this is the price of Apple over a 2-month period. And I just want to show you, if you'll notice the little red boxes there, that's the opening price. You'll notice that the opening price is near, and this is up to date. This is, where Apple closed Friday. It closed at, you can see it opened on the low and, went up to the high. But you'll notice that it closes near the high or low of the day about 80% of the time. Now, this is not included electronic trading. This is only included when the market opens at 9:30, which many people use. There's not a lot of people that do the overnight trading, but this is a very interesting phenomenon. And the thing that's important about this is that if you'll realize that if you're above the opening price, you want to be long, and if you're below the opening price, you want to be short. That puts the odds, very heavily in your favor. It's just a very simple thing that works extremely well. And that's the main thing that you want to keep in mind. Now, I wrote a book about this back in I can't even remember, 25 years ago when we didn't have electronic trading, with Peggy Mackay. She lived here in Tucson, and she helped me write the book, The Trading Diary, also. But she was an attorney that, hold on one second, that was very interested in trading, and she still is. But the little book is only about 60 pages, but it gives an idea of how to use it, up and down and stuff like that. So anyway, it gives you a pretty good, close idea. The original work on the opening price was done by Jim Sibbett and Earl Haddady. These were two commodity guys back in the 50s and 60s, back in the days of Roy Longstreet. They were in Los Angeles. Of course, Roy was in Clayton, Missouri, and also in Chicago. But they did a great deal of work on commodities with the opening price. Later on, Toby Crable, who worked with John Hill's son. John Hill had been at Duke in computer sciences, and he took the data that we had and put this together so that we could see that the opening price does give you a pretty good idea of what's happening with the market intraday. So the key is, if you're above the opening price, your odds of winning for that day are high. If you're below the opening price and you're long, the odds of winning are relatively low. So that's just the bottom line of what we're watching here, with the Apple. Now we've got I wanted to mention to you, by the way, Bitcoin, let's get this up here one more time. Bitcoin hit 6,300 last night. That exceeds the 1.618 by 111 points. So it's going to be interesting, what Bitcoin, does, from this level that we're looking at right here. But I wanted to talk just a tiny bit about a stock that's in the news quite a bit, that we've had requests about, and that is Twitter. In fact, I'm surprised this stock's not trading for 75. The fact that it's mentioned on the news on every channel all the time. I just don't understand it. Apple gets all that free press, but I guess there's a lot of competition with Twitter. But as you can see here, when the earnings came out the other day, we opened at around 19. We went up to 22. We closed pretty much at 21.68. You'll notice that we have a big ABCD pattern completing up here at the 23 level. It should have some resistance at the 23 level. That would be the I would say that would most probably be the spot where it would give a pretty good resistance, is what I'm looking at in Twitter. But that's just my opinion, and it's just the pattern that we're looking at. So let's keep that in mind. I'm going to have let's take a quick look here. I'm going to try to have Bill Meridian on this week from Vienna, Austria, Cycles Research. And we'll also try to have Rich Anderson on, because we've got some interesting things happening in these grain markets. We're starting to get a breakout now in soybean oil, approaching the 78% level. So that's an interesting one to take a look at. Plus, these channel lines that we've seen in the soybeans have held up really well, and that's giving us a pretty good chance. Just get this. I'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart of Minneapolis wheat in here just to show you. This was the one that caused the big brouhaha, where it rallied $2.50 a bushel during the supposedly collapse or the destruction of the wheat crop, which of course you see didn't actually materialize. But the reason why I want to show you that is if you'll look at it closely, it's been at the 61 or at this 61% retracement now for almost a month. That tells us that there should be some pretty strong demand at that point. Now, the reason why I'm bringing that to your attention is my friend Simonley is telling us that there's a chance that we could be seeing some shift in demand in some of these things, so we want to pay attention to it. And if we take a look here at the 4-hour chart of Christmas wheat that we've looked at before, we still have an outstanding target down there at 420. We're trading around 426 right now, so we're only 6 cents away. So that's a very low-risk trade. You can become a farmer there without risking very much at 420. You risk about, though, I'd say 7 or 8 cents, $350 to $400, and then we'll be able to be a farmer without risking too much at all. Now, the main thing, you guys are a little too crazy. I wanted to show you something here that was sent to us by one of our listeners here in the den. It's basically, I want to show you the chart here of gold. You're going to see it two different ways because it's really interesting to watch how this changes. This is the Japanese yen, and overlaid on it is the price of gold. Now you look at that and say, gee, that doesn't look like it has, very much correlation. However, if you invert the price of gold, in other words, as the price of gold goes down, the dollar yen moves. And then just look at this. This has a correlation like, it's like nothing I've ever seen before. It's nearly perfect. And so keep an eye on that Japanese yen because, that's a far, far bigger market than the gold market by a big stretch. And so that's something that we ought to pay close attention to. I might have seen this in the past, but frankly, I don't remember it. I was very happy to see it. And it was really very, big revelation to me to see this going on. Basically, what this means is that gold should be getting ready to rally. That's basically, what it looks like. It hasn't rallied yet. It's still down in this area where it's had some, strong resistance, but that's neither here nor there. Now, we did get a really nice chart from one of our friends, Kevin Murphy, who's done the work with Bill Ehrman after Bill passed away a couple years ago. Uh-oh, this is not good. It didn't turn out the way I wanted. I'm going to have to post it this way because I don't know any other. Oh, you know what? I'll just post it this way. We're all friends here. There's nothing secret on this darn thing, I don't think. We'll put it up here and take a look at it. And he's just showing you the relationships, from 1957, 1962, 73. Oh, there's the December 74. That was that's when I really started to learn trading. And then you'll see the high in August of 87. Look at that little crash that we had in October of 87. It looks like nothing on the chart. And it shows that we're coming into this zone here, but we've been in this zone here for a long time, about 4 or 5 weeks, and nothing's really happening. So anyway, we'll watch this with a little bit of history to see what's going on. And your computer screen. What I'll try to do is to repost that at a different time so that we'll be able to see what is really happening. I did speak with Stan Harley over the weekend, and this advanced decline line that he talked about, his oscillator, actually with the market up in the Nasdaq yesterday, is actually still turning down. In other words, there's a lot of stocks that are actually rolling over. You can't tell that by looking at Amazon and Microsoft and Google and some of the others, but that's what that tells us, that there is some distribution going on here. But we've been seeing that for quite some time. We do have some more information now here on the bonds that we were looking at. Of course, on Thursday and Friday, we went down and hit that exact 61% retracement. We hit it for 3 days. We hit it Wednesday, Thursday, and Friday, and now we're up 2 handles from the bottom. The $64 question is, how much should we rally? Well, if you go back and look from early September, the rallies that we've had have been just about 4 points. So if you take, 50 and 4, it's going to take us up to around 54, which would be taking out the highs of October, and that would put you right at a 61% retracement from the high that we made back in September. And remember, folks, what's really important about this, you're just looking at this chart from March through November, that high that we made in September was a 382 retracement. So, longer term, this is a very bearish chart, but shorter term, we're probably going to get a little bit more of a bounce. So let's just watch that, because it's going to be an interesting one, to pay attention to, because it is having a pretty good rally today, and we'll see what's going on. No, I never was on American Bandstand. I did meet Dick Clark a couple times, but I was never on American Bandstand. I could have been, because I was a real hoofer when I was a kid. Anyway, let's just move on to some of these things in here and see what's going on. You guys are changing the train of thought here, and I have a difficult time with that. I wanted to share with you I think it's the euro. Yeah, this is the chart of the euro as it relates to gold. This is very similar to the chart that we looked at with the dollar yen. And really, when you're looking at these, if we're looking at these, they do have some similarities, but the yen is far more correlated to the gold price than the euro is. But as you can see here, we have some pretty strong support at this 115.50 level. Today, we made a perfect little ABCD on a 15-minute chart that stopped right at the 116.45 level. We backed off about 40 pips from that level so far this morning. So not really, too much is happening, with that as we look at it and see what's going to happen with it this morning. Let's just double check to see how the prices are doing. The crude oil starting to move good. Let's get this is where, because we're getting pretty bullish on crude. I want to share with you about crude because I hope we have enough time. Oh, we got a half hour to go. Let's just get the crude oil up. So I want to show you. Oh, where did I put it? We'll get to gold in just a minute here, folks, but this is what's interesting here in the crude. We'll get it up here on this. I'll put the weekly chart because this shows it the clearest. It's been very bullish for quite some time here, but we look like we're going to get up to $56 a barrel. We're trading at above 54. We're almost at the 55. 55 is important, folks, because it takes out the high of the year in January, and if it doesn't get much above that, be real careful, because there's some smaller ABCD patterns in there that could, be a little bit tricky for you. And if you look at the heating oil market, you'll see pretty much, the same thing as you're looking at it. Let's just take a look at that, and I'll put up the heating oil. We'll be back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart, a daily chart of Softy, Microsoft. What I'd like to point out to you is, if you'll notice, we had a gap up, to say the least, in Softy, and that's not an easy thing because there's a lot of shares outstanding and it's very heavily traded. But if you'll notice the volume down there, it was 4 times normal. They did pretty close to 60 million shares, I believe. But what's important is you'll notice on that candle that it closed right at the low of the day. that means all of those 54 million shares that traded that day have a loss, because that it certainly looks like a blow off top. And if Microsoft were to gap down today, that would leave a classic island reversal pattern with a hanging man. That's not a very bullish pattern. But anyway, the fact that the volume was so big and everybody bought it on such an emotional day is now losing. In other words, if you bought it Friday, the only thing you could do is break even, and that is if you bought it at the low of the day. So if it did open lower, then it's I don't know where it opened this morning, because it's I don't get those prices right away, but I would watch this one relatively closely to see to see if it's going to work or not. That's the main thing that we're looking at right here. Remember the crude oil, folks, because it has a lot of resistance up here at this level here at the at the $55 a barrel level. We've been to $54.75 so far today, but it's going to be interesting to pay attention to it. Now let's switch our analysis over here to gold and silver for a minute. I just wanted to show you what happened to the silver on Friday. Thanks to our good friend Mr. Z here in the den. He pointed this out as it was happening. Silver was making a 78% retracement down there at 1660. It was a beautiful Gartley pattern on the daily chart, as you can see. It was very interesting because I was really surprised when I started to update the charts for the newsletter this week that the fact that silver was acting far better than gold, which is usually a positive sign for the precious metals. And remember, silver is about 1/6 the open interest in the gold, so it's much, much thinner and a whole lot more volatile. You know, it'll move 20 cents, which is $1,000, you know, in a heartbeat. But if we take a look at the silver chart here, okay, it did. It opened below the 83.7. Okay, so the closed at 83.84, so it did leave a gap. And then we'll see here. There we go. Thank you for the information. I appreciate that on the softy. But take a look here at the silver chart. The blue line, of course, is gold. And the silver, as you notice, went down to a 78% retracement, as we saw on the daily. Now, this is a 4-hour chart, and it gives you an idea of some of the smaller patterns in here. But you'll notice that gold made a new low, whereas silver did not. Now, that was a very important thing, in my opinion. Also, the platinum did not make a new low. So both of those were, you know, rather interesting. So in order for gold to turn from here, it's going to take a great deal of effort, because there's still some possibility of outstanding patterns that we have here in the gold. And, you know, gold is the big daddy rabbit. You know, it's the one that does everything. And you'll notice on this 4-hour chart on gold, we still have another target down there, down about another $30. That would be a washout pattern down to the 78% level. And but the thing is, you'll notice that on October the 5th, we made a 61% retracement on the weekly. Folks, that might have been a retest that we saw on Friday. I mean, you have to pay attention to that, because we didn't get below it. And I think that's an important thing to keep in mind. So we'll watch it and see what happens. And but there's a possibility here that we could get some legs in the gold market. Now, one other thing, when you're watching the precious metals, and you try to look at everything together to get a better idea of what these patterns mean, if we take a look at the XAU, let's get this up here, you'll notice that you see the gold line, which is the spot gold, and then you look at the XAU, you can see that it's completed the Gartley pattern, whereas the gold market has not. Now, that's basically telling you that the gold is stronger than the XAU, because it hasn't completed it. I mean, there's not enough to push it down, but look at the XAU. It stopped within 10 cents of the exact 78% level. So this is going to be pretty interesting. Now, if we break below these lows, none of this means anything, because that 618 on the silver is very important, and that 78% level on the XAU is very important. But if we break those lows, then we will get down about another $30 in the gold market, around $12.50, and that's where I would really like to see, you know, what is going to happen. If we take a look at platinum, since we were mentioning it, you'll notice that the platinum was able to hold on one second here. The platinum was able to hold, and we'll see what's going to happen with it. Going below, 910 in platinum would certainly be a pretty negative thing to look at. 877-927-6648 is what we're looking for here this morning, folks. So if you have any questions, be more than happy to take them. And if I don't know the answers, I'll make something up. All right, let's take a look at the overall market here. We've got all these gaps here in the Dow Jones that we've talked about. They are going to be filled, boys and girls. The question is whether it'll be in my lifetime or not, but this is the Dow Jones on the daily basis. You can see the big ABCD pattern. We've got 6 gaps that we're looking at. I missed one here that occurred way back on the 25th of, the 20, right after the solar eclipse back in, right around the 24th or 25th. But there are 6 gaps on this chart on the way up. You'll notice back in April we had those 2 big gaps, yet the market did come down and fill the gaps back in May. And then this is the pattern, that we're watching. So that's the main thing that we're going to be keeping an eye on, because when they do start to fill these gaps, they'll be filled one at a time, usually very, very quickly. But that's neither here nor there. 1 second, please. We've had a question about the composite, the Nasdaq Composite. Wow, excuse me. There's a couple of frogs in my throat. Let's get this This is the Nasdaq Composite, the one that has all the stocks in it. And you'll notice that we hit the 1.618 expansion of that move, where we had the tiny bit of a sell-off in that area, but that doesn't mean a whole lot. Now, the New York Stock Exchange Index has still not made new highs from about a week ago. That's going to be, we'll find out if that means anything or not. In fact, it was basically with the Nasdaq up 133 points, 2.6% on Friday. The New York Stock Exchange Index was basically unchanged, and that was telling you the same thing that the chart that Stan Harley gave us about the advanced declines, that there are a lot of stocks that were rolling over. It was just those few stocks, that the real expensive ones, that were in the news. In fact, I was watching the price action of Amazon, and wow, it was jumping 1 and 2 points at a time. So they were really hurrying to get into that stock. It was really something very interesting. We're going to take a little break here, and we're going to come back and we'll answer a few more questions that we have outstanding. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, as luck would have it, it looks like I've got some technical difficulties here, so it's going to be difficult to probably post any more charts for at least the short time frame anyway. So hopefully you can bear with me. You can get some of these things completed here. I wanted to, give me 1 second here, I wanted to mention, wow, this is not good. Hold on just a minute here. All right, just a second here. Son of a gun. Shut the front door and raise the rent. Anyway, I can't get this darn thing to work, but let's just try it anyway. We'll have to switch over. I want to give you this US dollar index because this is an interesting one to look at. We'll try to look at these currencies. I'm able to talk about those a little bit. So you can see the US dollar on Friday got up to this 95 level. If we get much above the 95 50 level, we'd be looking at this be breaking out to the upside, but we completed a little butterfly, as you can see. It was a head and shoulders pattern. This is something that we focused on several times, of course, here in the den and in the newsletter. That's worked relatively well, and now we've reached those price objectives. This means that the euro should be at really good support here, which we posted here in the market, and that's another one that looks to see if it's going to be to see if it's going to happen or not. But this is really strange that I'm having this much of a trouble here, but we'll get to it as we go here through the rest of this stuff and take a look at it. Anyway, we're going to be watching here to see what is going to be going on, and then we'll do one thing at a time and we'll see what's going on here. Okay, let's just wait here for just a second, and then we will be ready to go here with a little bit more information. I'm trying to get a chart ready for us, folks, but frankly, it's getting a little bit difficult, but we'll get it done here, hopefully, and we'll see what happens, and then we'll just go from there. Okay, let's move on here to the next one, and we have a question about the IWM, which is the Russell 2000. That's the small cap index, and if we take a look at this, you'll notice that we topped 2 weeks ago, back on right around October the 5th, and of course we had the ABCD pattern come down on Thursday. We had the big rally. Right now I think we're about unchanged to down just a little bit in the IWM, but we did make that 1.618 expansion, and you can also see the gaps that we have here in the IWM. Those will also be filled. The $64 question is going to be, will it be in our lifetime or not? So we'll take a look at this thing of what we're going to look at. Anyway, this is what we're looking at early this morning. Whether it's going to continue on up, we'll have to wait and see. You'll be able to figure that out, of course, by the end of the week, whether we're going to have too much. Now, we do have Norm Winsky is going to be our guest here on the full moon here on the 4th, And so that's an interesting one. That'll be Friday. I think Norm is either on Thursday or Friday. I'll have to double check with him on that. And we're going to do our best to have Bill Meridian on this week because his cycle work, even though it didn't work during the October period, has been, pretty good. I did want to bring up this one more time. This is the chart from Stan Harley on Friday, showing the 93 trading day cycle. That's trading day, folks. Those are not calendar days. And you'll notice that that's been pretty accurate, between 90 and 93 days for quite some time. And Friday was the 93rd day. So that should mean something. Now, the Dow and the others are still a little bit weaker, but frankly, the others seem to be holding up. The Dow is down, 30 points. The S&P is down 4. The Nasdaq, of course, is still going up. But, it did make a new high by just a little bit, but that's not unusual because this thing has been, stronger than Hector's pup. And that's going to be interesting to see, how this one turns out as we look at this. Okay, let's move on here to one other question that someone had, and that is about this Japanese yen that we've been talking about for quite some time. We'll put this up so you can take a look at it. This is the daily chart, and we'll look up here that we've hit this 61% retracement 3 times since May. We hit it in May, we hit it in July, and we hit it again last week, right at almost the exact number. I came within about 10 pips, I believe, and now we backed off just about 100 pips from that level, which tells you we're probably getting ready to move down. But if by any chance that we go blasting above this 115 level in the end, boy, you don't want to be short, because that has the potential to have one heck of a move. Remember, this is the dollar yen that our good leader, Tom O'Brien, talked about when it was down around 74 back in 2011. So that's that's the main thing. So we'll see how this proceeds as we go through, the rest of the morning to see how things are going to come up. So anyway, we'll watch this a little bit here to see what's going on, and then we'll go from there. Okay, let's move on here. The British pound, folks. The British pound is trading at around the 131.80 level. That high we had today at almost at 132 was an important spot. If we get above the 132 level in the British pound, that would tell us that we're most probably looking at something that is going to be a lot more bullish, and the pound could go a lot greater. Now, people ask me the question about what's going on in Spain. Folks, I like going to Spain, but frankly, I don't know anything about it. So I really don't know too much about what's going on. Hey, we got a caller. God bless him. Mr. Z from Philly. What's up, my friend?
Yeah,
hey.
Good.
The Eagles.
Welcome back to Arizona. Good to hear you back there.
Yeah, how about those Eagles, man? The number 1 in the NFL.
Well, everybody has their 15 minutes of fame, or is that 15 seconds? I forget.
Well, they're doing better than 15 seconds. That's a couple months. What can I do for you, my friend?
You touched on the dollar index. Thank you on that. Could you kindly pull up the euro, the daily or the weekly charts? And of course,
Sure.
The euro is 50 or 55% of the dollar index, so it's the most dominant currency pair therein.
Sure.
And the euro, let's see.
I'll do
there
the
was
weekly.
an ECB meeting last Thursday.
Mm-hmm.
And in reaction to the announcements coming out of that, there was big selling in the euro, and the euro broke under 116.60, which
Yes.
was a prior swing low. And I observe a feature you make note of regularly, and that is wide-ranging bars both on Thursday and Friday, the euro falling. My question is, now that we've broken under 116.60, that swing low, does that signal to you something bigger to the downside, or are you expecting this to reverse right back up? Because I thought I heard you say you thought the dollar index was poised to top and reverse right back down.
Yes, I'm watching that dollar index, and I just posted the euro daily, John. Stay with us for the break, and then I'll try to explain what I'm looking at here in the euro.
Thank you.
You bet.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Mr. Z from Philadelphia. John, basically, I posted the chart of the euro in there, and as you can see, there's a lot of support at this 115.50 level that we hit on Friday. That was basically a small ABCD pattern, over the past, few days. So it's oversold, and it should start to rally. That's what I'm looking at.
I thank you kindly. Is there a key level it has to rise over, in your opinion, to allow it to extend the bounce higher?
Well, on a short-term basis, it needs to get above the 116.60 level. We're trading at around 116. What are we trading at right now? 116.14. If we get above 116.60, that would give us a chance to see that we're going to go a lot higher, would be my guess.
I appreciate that. One last question. As a trader, would until 116.60 is regained, would it be a trade, a low risk trade as you see it, to short against 116.60 with a buy stop just above there?
Yeah, well, if you looked at it last night on a half-hour chart, it made a perfect ABCD pattern at 116.40. It went to 116.45, and now we've come down about 40 pips, which is half of the harmonic number in the euro. So this is what it's doing right now. It's just making a short-term retracement.
Great. That's so helpful, Larry. Appreciate it very much. Thanks for taking the call.
Thank you, my friend, and may God bless. Okay, we're coming down to the end of the show here, folks, so we'll see what's going to happen tomorrow. And right now, just make sure that you use good money management. And tomorrow I want to talk a little bit about errors, and especially about trader fatigue. It's very, very important to be aware of that, because this can happen. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.